Well, starting off the bulletin with updates from global markets, crude oil prices fell sharply at the start of the next week, with Brent crude sliding around 4% to hover around the $93 a barrel mark. The sell-off in oil was triggered as the United States paused its military strikes against Iran for consecutive nights, and both nations dialed back immediate retaliatory actions. Now, this de-escalation significantly eased persistent trader anxieties over potential supply bottlenecks and disruptions originating from West Asian energy corridors. Following the drop in energy, safe haven flows shifted away from the greenback. The US dollar index weakened against the majority of its Asian trading pairs. Conversely, precious metals caught a bit, with gold pricing rallying past $4,100 an ounce in early Asian trade. Industrial metals like copper also experienced mild upward momentum. In Asia, regional markets traded higher, but with a degree of caution. Investors weighed softening commodity costs against ongoing local developments. Now, that includes massive trading debuts for Chinese chipmakers and currency intervention watches in Japan. Sentiment across AI-linked and semiconductor equities remains mixed to subdued, with investors continuing to reevaluate tech sector valuations following recent updates from major US tech firms. Wall Street finished the Friday session with slight defensive adjustments across major benchmarks as traders digested uneven tech earnings and shifting inflation metrics. However, heading into the next week, sentiment has flipped positive. US stock futures are pointing towards a solid rebound at the opening bell. Contracts tied to the tech-heavy Nasdaq 100 are outperforming with a robust gain of over 1%, while S&P 500 futures climbed roughly 0.5%, signaling a recovery from last week's chip sector-led pullback.